Back with closing trades, and well, a very interesting conversation lined up with our experts of the day. We have Mr. Sunil Subramaniam, market expert, joining us on the show on the fundamentals, and Arpit Beriwal from Motilal Oswal Financial Services joining us on the technical. Good afternoon to both you gentlemen. Mr. Subramaniam, let me start with you. The kind of recovery that we're seeing in the market, really unexpected. We're almost 350 points higher off the day's lows. The rupee has also started looking like it's once again coming back in the RBI's control, at least the direction they want the rupee to go in. Talk to us about what are some factors at play over here. How should one be looking at this bounce? Is it here to stay?
Well, I think that this is more short covering today. I don't think it's a fundamental move. The reason for that is actually, you see the IT index is actually driving the returns of the overall Nifty. Because IT, what's happened is that I was listening to the previous speaker also on the dollar situation. And I think what he was saying, and I concur with that, is this is a speculative unwinding forced by RBI. First, they did that $100 million open dollar position limit, and they found that the banks were just passing those on through the NDF market or to their corporates, right? And they were not actually coming to the market, because once you deal in the forwards market, then you're circumventing the spot market. So RBI then came up with the subsequent circular, said you can't do that and banned that, and said you have to go and sell the dollars. So that liquidation of these trades and those rupee bears have got hammered today. And that's why there's a sharp appreciation in the rupee. It's mere technical. And why I support this, that it's only technical, I'll tell you, is 2-3 things. First is that if you look at the dollar index, it's crossed 100 today. So there's a strengthening dollar. Second, oil is now at almost 109. So rising oil is bad for the rupee, right? And US interest rates have up, like I think, 6 basis points from 4.3 to 4.38. None of this is supportive of a strengthening rupee. So what FIs have done is, because of this sharp appreciation of the rupee, they found a good entry point. And when you enter, because they expect the rupee to weaken over the medium term, once this immediate impact of the RBI speculative unwinding has gone away, I think 10th April is the deadline for that, rupee will go back weakening. And so they find that it's an excellent buy, because it's an artificial correction, because IT is the one which will benefit when rupee weakens. So they have smartly moved in and bought the IT stocks today. And so the IT index rally has actually come and bailed it out. So I think that's one. And then any other stock you buy, because today when they enter the market with a strong rupee, they are protecting themselves against the weakening rupee, right? Because they are getting into a good position here. Second is that the rupee's strengthening has also helped technically, I suspect, but my technical friends would probably help out, because a lot of algorithmic trades force selling when rupee weakens. And the opposite happens when rupee strengthens, because that's one of the indicators that you feed into an algorithm in a computer saying India rupee. So today the strengthening has also led to certain algorithmic related maybe buy trades. And that's why you see the bank index and some specific stocks there, which are where the F&O play is there actively positive. So my sense is that nothing has really changed at the ground level, with oil being high. Rupee also, like I said, I feel is under pressure. But DII is also, I think, will now wait a bit before buying in a general sense, because the earnings season is on the cards. And from 10th April on, you'll get all the earnings season flowing through. So they'd like to keep some firepower with them to choose the right sectors to invest in as the earnings season unfolds. So I'm, however, on the earnings season itself, I'm reasonably confident, because yes, EPSs will take a hit undoubtedly, but I think the market consensus has already brought those down. So relative to consensus, you might actually see some companies and sectors do better, and that could actually give support to the market. So I don't think the market is going to correct big time from here, but definitely for a recovery, we have to wait for the earnings season to pan out. The Trump-induced volatility from his tweets will continue to be an overhang on the market. Let's wait and see what tweet he comes up with tonight and tomorrow.
Arpit, give us your take on this. Do you believe this is purely technical in terms of the move?
Good afternoon to all. So if I talk about the headline indices, first Nifty, So interestingly, Nifty has been forming lower as lower structure on the weekly time frame for almost 5 to 7 weeks. Particularly this week, we have seen in last couple of hours very strong recovery from lower levels from 22,200 to almost 22,700 levels. But the structure of lower rise is still intact, and the levels we are watching out for is 22,950, 23,000. That is a previous this week high. So our sense is that any closing above 23,000 levels on the spot level will change the structure of the medium term structure from lower as lower structure. However, having said that, good recovery is seen from the low levels. Important to see that on Monday coming week, whether we see a follow-up buying. So on immediate basis, 22 is a major support level. On the upside, for any change in the setup for medium term would be 23,000 in Nifty. Whereas we are talking Bank Nifty has been a huge underperformer in last 1 month. We have seen tremendous selling pressure in almost last 5 to 6 weeks. And looking at the chart setup on the weekly time frame, small body candle is formed on the weekly time frame with long lower shadow. So definitely indicates that 50,000 will be acting as a major support. However, for confirmation, the level that we are watching out is 52,100 levels. Closing above 52,100 would be a key change trigger for the Bank Nifty on the positional upside momentum. Till that time, we have to watch out these levels. One more thing I would like to add is India VIX, that is a greed and fear indicator. It is at a very important junction, and we would be looking out for the level that would be for the next would be below 22 levels. Once India VIX is below 22 levels, we can definitely say that there's some stability in the market, but till then, volatile swings will be likely to be there.
Okay, so that's the view coming in on the technical front, but shifting focus onto Times Network exclusive. HAL CMD says the grounded Tejas fighters are expected to be cleared for flying as soon as next week. The Mr. DK Sunil, he adds that their order book remains robust, giving them visibility of 6 to 7 years. Hear out that interaction.
During the war some time ago in Gaza, there was a temporary interruption. But after that, the supplies have resumed. Similarly, in this latest conflict, also there has been some delay. But we feel with the previous experience that the companies will catch up. So right now, we don't see any immediate impact. Perhaps there may be a delay in supplies, but I'm sure we can catch up in this financial year.
Can you tell us, first of all, you've done well in this financial year. But that apart, can you tell us what the delays have been? How these wars and conflicts will impact your work? In which areas?
So this year has been a very good year for HAL. We have moved to a ratio of about 40-60, 40% manufacturing and 60% ROH. Earlier it was much less. So that's a very good milestone. We produced 15 helicopters, engines, AL-31 engines, 35 engines. We have overhauled 21 Sukhoi 30s. We've delivered 2 Dornier Hindustan 228 aircraft to Guyana, a couple to the Indian Navy. So we see all round our manufacturing output has gone up as well as our repair and overhaul. So this has been a very good year, notwithstanding the lack of supply of the Tejas. Still we have been able to show growth and improvement in all our numbers. So it's been a very good year, and with a very good order book that we have, the future of HAL is in good hands with good order book for the next 6 to 7 years.
Okay, so that's the take coming in. Sunil, what are you doing in this market? Do you buy at this point? And would defense be one of those which look interesting from a buying standpoint?
Not yet. I know today the defense exports numbers came in very strong at 35,000 crores. Very, very good news. But I still am on the side of it is being a little bit overvalued still. So I would wait for further corrections to enter the defense play. But otherwise, I think my focus still remains on the domestic economy. I think that this summer should be good for consumer durables and discretionary consumption. So my focus is that those will do well. And I think that the credit growth gives me good indications that the consumer discretionary, which is largely financed by EMIs from NBFCs and banks, should continue to see a good growth. So BFSI is again a good space. So BFSI plus consumer discretionary is what I'm focusing on for this period to accumulate. But otherwise, I think the bounce back in IT today, like I said, is more of a technical because of the rupee suddenly getting overvalued in a space, but people will have to wait and watch how that plays out.
Okay, Mr. Subramaniam, it's interesting you talk about consumer durables, especially because of the summer. Because just yesterday, in fact, the Met department has predicted lower than usual temperatures for summer this time around, and that's actually why names like Blue Star and Voltas have been falling since yesterday. Let's get a technical sense on both of these names. Arpit, good time to enter names like Blue Star or Voltas solely based on the technicals, given the kind of fall that both of these stocks have been seeing since yesterday.
So if I see overall the structure broadly, Voltas and Blue Star have a similar price structure. If I look at the weekly setup for Blue Star, particularly Blue Star, if we see the setup wise, it has been trading in a broader range between 1500 to almost 1800, the broader range. Today we have seen a big gap up, good recovery from the lower levels, but our sense is that on the weekly setup, it is still forming low structure. So better to wait for Blue Star. Whereas talking about Voltas, so Voltas is relatively better placed with trading near its major support zone of around 1120, 1180 to 1200 levels. And our sense is that on the daily scale, we have seen good recovery. The levels that we're watching out for is around 1240, 1250 levels. Once it closes about 1250 levels, definitely we can buy it with keeping stop loss of 1170 for an upside move towards 1300, 1340 levels. So having said that, between Blue Star and Voltas, Voltas is relatively placed better as it's near its support zone, and one can look for a support based buying with keeping stop loss of 1170 for an upside move towards 1280, 1300 plus levels.
Okay. Let me go across to Merrill. In fact, the Trump administration is considering a 100% tariff on imported patented medicines. To claim exemption, global pharma companies are seeking shelter through deals leaving Indian companies exposed. Major impact will be seen on a Sun Pharma, on a Glenmark. Merrill joins in to explain this.
Well, yes, there's a new tariff alert and Indian pharma stocks are now in the spotlight. Reports are saying that US administration may soon announce a fresh tariff on the drug makers that have not yet agreed to lower their prices for these drugs in the US markets. But for a bit of background, the Trump administration has earlier considered a 100% tariff on imported branded as well as patented medicines. Now for India, most companies are relatively protected from this because we mostly export generics and not patented drugs. But Sun Pharma actually has the most exposure to these segments from the Indian pharma pack. It's made around $1.2 billion just from patented products in the last financial year, that's FY25. And around 85 to 90% of this came from the US markets alone. In fact, they've got a lot of brands also over there, brands like Illumia and Winlevi, which could directly fall under this tariff category. But today, even Glenmark was in focus because of a recent development from the company's end. Glenmark is now commercializing its brand Ryaltris in the United States, and this is actually Glenmark's first innovative patented product. And it's also manufactured in Switzerland, meaning that it would have to be imported into the US, which now makes it a potential target for these new tariffs. So while most Indian pharma companies stay safe from these tariffs, Sun Pharma and Glenmark are under pressure because of their exposure to these innovative products. And in the case of Glenmark, it's just a case of bad timing.
Okay, thank you so much for that, Merrill. Now, in terms of some of the movers as well, Sunil, you know, some of the value retail plays, some of the other retailers as well, Trent, even an Avenue Supermarts, for example, very strong numbers, at least in terms of store count opening. There seems to be some amount of zing with regard to that part of the economy. I'm sure the last 1 month may have changed things, but the quarter at least looks strong overall in terms of numbers. Your take with regard to those numbers?
I think that, like I said, consumer discretionary includes durables as well as high-end retails. And I think that there has been a GST impact which has benefited them too. And I don't think I see that Indian sentiment to buy is much impacted by the war. I know the markets have been very choppy and people are nervous about that. But otherwise, at the ground level, I don't think a consumer's habits are going to change. And I think that overall consumption will continue to be a strong story. The next trigger for that, of course, apart from the summer, is how the monsoon is going to play out, because that will mean rural demand also will come and support it. But overall, I see these numbers as indicating that the core strength of the Indian economy is on a good wicket. Yes, individual EPSs with the imported price of petroleum-related imports could be under pressure, but the operating leverage should come in and help them because any top line growth would help them cover their fixed costs. So I am reasonably confident that overall the broader consumer sector should do well this summer, and the guidance from this quarters is more important than the actual quarter that has passed. So the JFM numbers are not as important as what are they saying about April to September, the next 6 months.
Okay, point taken. Kunal, talk to us about some of these names on the charts. Trent, now you have recently turned bullish on Trent, and Avenue Supermarts also. Do you believe good time to buy? Given fundamentally also there's been a lot of valuation correction, the stocks, both of these names are off their all-time highs by quite a lot, a significant cut coming in. On the charts, how are they looking?
Absolutely, I strongly believe so. I think at current levels, 3,500 approximately for Trend, it's an excellent level to go long into the stock price. Given the pedigree of the stock in the past, a few years till 2024, mid somewhere when the stock topped out at 8,000, 8,500 kind of a zone. From there, more than a 60 to 65% correction for Trent has already shaped up, and we all know that good news, good prices, they don't come together. And the reason why the stock prices have corrected, for Trend in the last, I think 1.5 or 2 years, approximately, has been on the back of negative news flow. But I think at current level, we are seeing, names like Trent, DMart solidifying a very strong base for themselves. It's good that, even if the stocks go into a time-wise correction over here, this could be a very good positive for these stocks in a medium to long-term perspective. And I think at current juncture, the risk reward is extremely attractive for long-term investors to start nibbling into these names. Even after this last, I think maybe 2-3 days of a recent price appreciation for names like DMart, where the stock has moved from sub 4,000 to maybe 4,250, 300 levels the last I'd seen. I would still believe that these are good levels where traders, long-term investors, they should start nibbling into these names.
Arpit, talk to us about your picks. What would you do in a market like this in terms of stock-specific picks?
So generally, if we see whenever the market recovers, the heavyweights are the first one to drive it higher. And looking at the overall setup of the Nifty, if we see particularly where we can see some bounce back move if it closes above the 22,950 levels. So our sense is that we have to pick from the heavyweights, and our top picks would be from the selective sectors. So first would be from the telecom space, that would be Bharti Airtel. So looking at the setup wise of the overall Bharti Airtel, the stock has corrected 10 to 12% in recent past. Look at the setup wise, definitely the stock is near its major support zone. So 1680, 17 is a major support zone where one can go long in Bharti, with keeping a view that definitely the stock can again head towards its new life territories. Along with the second pick would be Shriram Finance. So as you have seen a brutal selling across the NBFCs in last 1 month almost, but definitely the Shriram Finance was a huge outperformer in last couple of months. The stock has seen a decent correction from 1100 to almost 890 levels. So second pick from the NBFC space would be Shriram Finance, where major support is seen around 820, 830 levels, and slowly steadily the stock can head again back to 1000 plus and 1100 plus levels. And third within this would be, along with that, would be from the PSU space, and that is SBI. So stock has been a huge outperformer. Definitely, we have seen a very brutal selling in last couple of weeks in the PSU index, but the stock is coming at to its major support zone. And if we see that from a risk reward perspective, SBI looks very relatively strong at current levels. So I think from a bounce back move also and from position also, SBI looks good, turning from to its 200 DEMA. So I think these three picks are there on radar for playing the recovery move: Bharti Airtel, SBI, and Shriram Finance for coming week 2 months time frame.
Okay, so SBI, Shriram Finance looking good. Names from the Nifty. So that's the buys coming in right now. But while we're talking about some buzzers, it's V-Mart Retail that's doing exceptionally well in today's trading session on the back of a very good set of quarter four updates that the company has come up with. Let's take a look at what V-Mart Retail's numbers look like. Quarter four revenue from operations is up 24% on a year-on-year basis, but on a sequential basis, it's a softness of 14%. Nonetheless, it's a good move year-on-year. The same-store sales growth number has come in at 12%, which is 12% for the core brand and 9% for V-Mart Unlimited, their sub-brand. So this also looks very attractive given the context that it was flat just in the previous quarter. So this jump up of 12%, the street is also giving a very big thumbs up to this. In quarter four, 29 stores were added, 6 were closed. Total store count as of the end of March is 577. Of the 29 stores that were open, the major expansion took place in UP with 11 stores and Tamil Nadu with 4 stores. So they are eyeing pan-India expansion, and they are also expanding and opening stores in line with that strategy. And FY26 lastly has seen the highest number of store additions for this company since their operations, with 92 stores added and 12 closed, so net addition of about 80 stores. On the back of very good set of Q4 updates, V-Mart retail is doing very well, almost 13.5% higher. But switching gears then, sources to ETNOW suggest that RBL Bank has received the nod of central bank for its likely stake sale to Emirates NBD. My colleague Ankur is here with more details on that.
Yes, sources say that Reserve Bank of India likely to have approved the proposed deal with Emirates NBD of RBL Bank, and we understand that approval has already come. Now, as far as the approvals for the deal are concerned, remember CCI has already given the approval for the deal. Now, the other milestone which needs to be achieved for the completion of the deal includes SEBI clearance, which is also expected soon. After that, we understand that for the timeline of the completion of the deal, an open offer needs to be triggered because the acquisition is more than 26%, and therefore that open offer is likely to be initiated next month, subject to the approvals which come from SEBI and all the clearances by the regulator. Now, all in all, we may see the deal completion which is happening likely soon, because all the regulatory clearances which were awaited, many of them have already been achieved, and SEBI is likely to consider the deal soon.
Okay, thank you so much for that, Ankur. In terms of the other one that's really taken the street by storm today is Latent View. The stock is up 20% on the back of an acquisition, just $3 million acquisition in a healthcare startup. But it's a $3 million in intent, I believe. More to do with the fact that Latent View is getting into healthcare, and it's a very large market in the United States, and therefore the addressable market is very, very large. And of course, there are enough bottlenecks in that segment as well in the US, and therefore a real urgent need for addressing, which Latent View can do. Currently has 0% in terms of revenue mix towards healthcare. Now, this puts it or gives it a foothold into that industry, and it's a large one, which is why you're seeing the kind of move on the stock that you're seeing. It's a huge move, 20% higher. Sunil, IT in general is seeing a bit of a catch-up. Do you believe the bottom with regard to IT is largely made, or do you believe that problems will still arise? I'm trying to get to the fact that very soon we will have IT sector earnings and commentary come through, which will likely signal how managements are looking at AI and what the impact of that could be. Do you believe that a lot of it will likely be positive?
Yes, I do think so. I think, yeah, you're right in terms of being close to a bottom there. And the reasons for that are that, see, this latest Anthropic-related scare which corrected IT was a global scare which hurt us. But our IT has been under pressure for a very long time. Over the 1 year, probably along with reality, is the worst performing index. So the overhang of AI and its impact on IT has been there for a long time, and the stocks have been correcting. Now, if you see there, I would say that especially in the large cap space, the correction has gone to such a level that the dividend yields look attractive. So I think they will attract buyers from the pension funds and the income-seeking institutional investors. So that's one. The significant thing to remember is that IT has probably gradually now shifted from a post-COVID growth-oriented sector to a value-based sector today. So when you value buying steps in, then automatically a bottom forms. And I think that given the overall negative overhang, whatever they come up with in terms of positives will be taken with the relief. Second is that even if this business model change is to occur, it is going to be over a period of a year and a half, 2 years. But the current model that it is doing, it is taking it as if after 5 years, the IT business just falls off the cliff, which is where I think the correction will happen. There's an overreaction and correction. It should stabilize at better levels. And the Indian IT companies are also aware of this. I think they will show 2-3 things here during the earnings season, which I'm eagerly anticipating. First is how are they using AI to reduce costs internally, to make their products better. Second is how are they renegotiating prices on a per order basis rather than a per employee or per hour basis, where they can also mask the gains that they get from IT. And the third thing is that the acquisitions or their plan for deploying the cash. Remember, all Indian IT companies have huge amounts of cash on their balance sheet, and how they deploy that. If they give us some good clues around that, you could see buying. And finally, what I said at the beginning of the show, the rupee to me is on a weakening trend because of strengthening dollar, crude prices rising, interest rates rising on the US side. So India also, I think, now crossed 7.1. So overall, the rupee is going to continue to be under pressure, and that's a positive for a export-oriented sector like IT. So I think that we are close to a bottom there, and it's definitely. But remember, IT is now got to be a part of your value portfolio and not your growth portfolio. That's the significant mindset change we need to look at.
Okay, really appreciate your perspective on this, Mr. Subramaniam. And Arpit, you too, thanks so much for taking the time out and joining us. With that, about a minute left for trade to wind up for the day.